Tuesday, March 25th, market analysis, Stan Ehrlich. Good morning, 9:48 a.m. California time. We have a little bit more of a rally in the stock market indexes, and I always start out with the indexes and go to futures. And I got a couple of stocks today to talk about. One's Apple, and the other one, I forgot the symbol at the moment. Very popular. Okay, so E-mini made a high today, a little bit higher than yesterday's high. Yesterday, it's important to note that it was a sharp rally and it did gap up all of the indexes, except for maybe the Russell, uh, gapped up. That's very, very unusual. Now, basically can only happen over a weekend, and that's exactly what we have. Monday, they all gapped up. Gaps are almost always closed. So I do expect, very much so, a move back down to the high of Friday. Not the high of last week, but Friday last week. That's closing the gap. And I don't think that's going to hold. I think the market will probably bounce maybe a little bit on the gap closure, but I think it's going to keep going down. And I am looking for a test of the lows of mid-March, and I am looking for new lows. My minimum downside objective is 5,500 for the E-mini. And that's because of the double or triple, if you want to call it, or triple top, and the downside breakout level, which is where we're going right now. That's a beginning of some significant resistance around 58.58. In fact, even 58.47. And today's high is 58.30 something, 58.37 and a quarter. So we came very close, but not quite. And I wouldn't be surprised to see a minor new high today or tomorrow, but I don't think it's going to move up a heck of a lot more. And I do think we're going to be where we're at right now and lower probably before the end of the week. If today the market closes lower after making a new high like this, that could be the beginning of the break to at least close the gaps. So let's go look at some detail here. You get your 1 minute chart opening yesterday afternoon, slipping a little, making a low at 1:20 a.m. California time, middle of the night. Then we got a nice rally and another new high a couple hours later, but they're not staying up there. The market has pulled back a second time. So the first sign of increasing weakness is going to be getting below 58.12, and it may be very soon. And if it starts to make new lows for the whole day, and this statement goes for the other indexes as well, that could start some real downside movement that won't stop until the gaps are closed and or objectives to the downside are fulfilled. And this brings me to this spider, SPY. Gap closure is going to be about 565 or so. We hit a little bit of resistance already. Today's high is slightly above the original downside breakout level of around 575 and 3/4. So we're still higher on the day, but by very, very little. And if it starts to make a new low for the day, 1 minute chart, it's going to start to chew into yesterday's range. And what I would say would be important here is 572. Getting below that is going to start some increasing downside momentum, I would expect. And then here's the gap closure. You got to get down to 564.80. And then, of course, getting below last week's lows would be quite significant. Next, we have a higher high today. And yes, the QQQ gapped up. I'm expecting a move down to 481.5, but that's just the beginning. Remember, there's a chance of a little more strength up to resistance before the gap closure move down begins. Or I can't tell. We could do it any time here. Now, none of these are overbought. That's too bad. If they were overbought or real close to overbought, I'd be a bit more aggressive about saying the down move might be beginning, but not yet. So we could fiddle around here, go up a little bit more and then down, or down, but down is the key word. Next, we got the 1 minute chart on the QQQ. So I really need it to start to move below 488.90-ish. And with the NQ, we got a gap and it made a new high, but in a resistance area, and it's staying a little stronger than the others. It's nearest high at the moment, up a modest amount, nothing special, but it's above yesterday's high. The problem is it's right at a resistance level, and it could also not necessarily go up much more to the breakout level, and at any point turn back down again. Not overbought though. So I got to allow for a little more strength, but I'm looking for the gap to get closed soon. A few days, a week or two at the very most, and then lower. Okay, this is the 1 minute, and as you can see, it's actually going up a little bit at the moment. No sign of weakness here, frankly. Already bounced off a little last couple of days support level. Okay, not showing much weakness at all. Now we're going to go to the YM futures, and we've got the gap up on Monday, and we've got a little bit of a higher high. And on the 1 minute chart, also showing relatively decent, steady strength. Lows are higher, highs are higher. For the most part, looking, like it still wants to go up a little more. But there's your gap area. Got to get down to 42,339, give or take a little. And then I think keep going. Now, what about the Russell? Yeah, it didn't gap up on the weekend, or on Monday morning, I should say. So it doesn't have a gap. Remember, this is a much different index. It doesn't act like and move quite the same as Spider and relatives and the NASDAQ relatives. So what do we got? Rally up to resistance, not overbought, could move up a little more. Recently quite oversold for quite a while, couple, 3 weeks, it looks like, but finally hitting support and then taking off upwards. So we'll see a little bit more strength, but anytime now, this could start to move back down some. Now, this is the 1 minute on the Russell. Looking a little bit tired, but it's bouncing off support pretty good here. Next, we got bonds. Bonds have made a minor new low earlier today, earlier in the session, lower than the previous lowest low, which I thought was the shoulder low on March 13th. But yesterday and on other days as well, I pointed out that the left-hand shoulder was a double bottom in itself, which worked pretty good. But the double bottom is, in fact, the shoulder on the bigger pattern. Now, this is not a huge pattern. It's a fairly normal size. It's about 4 or 5 months or so. The bottom is the bullish engulfing ER buy signal, and I think that's the second low on a much larger double bottom formation taking a year and a half to form. And the first low, October of 23, was also a bullish ER buy signal. So my system caught the two major, huge lows in the interest rate futures, 30-year long bond, for the last couple of years. Okay, good. Now we're working on this last shoulder low, which now looks like a potential double bottom also. It's a few days later than I thought. I thought it was going to be inside the circle. I got a touch on the circle on the 13th of March and a nice rally out of it, but it couldn't stay up and it flipped. And now we're down and now trading higher today than yesterday's close. So this looks like it may form that little double bottom. Now that's it. I don't want a triple. I don't want any lower lows. It's going to start to drag on too long to the right. It's going to start to make lows lower than I would have expected, although the bottom at 115.11 is the same as these two lows in November. Yep, November 6th and November 18th. So I've got to allow for that possibility, but it looks now like it came super close and it's trying to reverse. 10-year notes, same thing. Minor new low for the last couple of weeks. There's no double bottom involved. but now higher on the day. I'd just love it if this would have a bullish engulfing. Okay, crude. Higher high. Current quote a little lower on the day. Not overbought, but getting up there. You know, today's RSI high was 70 and a fraction. I'm still thinking it's going to go up some more and hopefully get overbought, maybe test this old trend line. Don't have a real solid handle on this, I don't think so at the moment. So I'm going to shut up at the moment and go to the next one. Heating oil. Pretty much the same story. It is up a little at the moment as opposed to crude being down a little. It did get above a resistance level. Today is 100% above that little resistance zone. Yesterday it got above it, stayed there, and it keeps on going a little bit more. I'm modestly friendly here, but don't have what I believe to be a real strong handle on it. I do have to point out something. What happens if you like this story? That's the beginning. That's the second high. This is a shoulder back in June 4th of last summer. This whole big flat trading range in general is the head of the formation, although it does have its lowest low. It's off center. Remember, if this is the last shoulder low, then somewhere in the middle, somewhere around in here should be the bottom. And if you go a little left and a little right, you do have bottom. Maybe. It's just got a very big, large head of the formation. And there's your first shoulder low, and there's your second shoulder. Neckline's okay. Size is very nice, very big. 2/3 of a year. I don't know. Something to watch. If we keep going up, which I'm a little doubtful about, we got resistance at 2.26. We got more resistance at 2.4. And then, of course, you got the neckline or previous rally highs. But that's what last shoulders do. They have a low lower than a significant amount of previous time, but not a new low for the trend. And they managed to turn around and go through some resistance levels on the way up to the neckline and then break out. And it's clearer sailing on the way up to the minimum objective, which would be really substantial in this case. Right now, I've got an objective up to here, 2.6, because of the bottom formation and wasn't looking for a shoulder. But now I see the symmetry here. Something to watch for. Natural gas. Head and shoulder top forming, did form downside breakout last week on the 20th Thursday, Friday all together below the neckline, closing a little lower again, not really coming down very fast, which would be much more normal, but this is not unheard of. And then a little bit lower on the close yesterday, and we're a little bit lower again today, starting to make minor new lows. So far, so good. Just slow. Just pretty slow. Usually the breakouts are pretty damn vigorous and large breaks for a day or two. So far, that's not the case here, but we're still coming down. Somewhere, maybe down around 3.5, hit a little low, halfway to its objective, which is a level of 2.99, or call it 3. That's my minimum downside objective off this relatively small pattern that only took 1 month to form. Okay, that's the best I can say. Bearish to the tune of at least 3.0 or lower. Take a few weeks to do that, probably. Gold. Got overbought, topped out, coming down a little bit, not very much. Probably come down to support at 29.72-ish. There's a chance it'll come down to much better support at 28.51. I don't see any kind of major long-term top here. I see a little bit more of a dip for a short period of time, and then new highs. I got nothing big as far as any bearish commentary is concerned. So longer term bullish, short term a little bit more downside reactionary. trend is still very much up. Silver could be forming a major top. So this is not going to agree with the gold opinion. If this possible head and shoulder top, and we have formed or are in the process of forming the last shoulder, I would expect it to finish forming it within the next few weeks by about the 10th of April. And there could be another rally to test these resistance levels. But that could have been the single shoulder, last shoulder high, and that's it. I pretty much like what I see. The timing is pretty good. The levels are okay. The market was overbought. Could have had a couple of more features involved, like a bearish engulfing would have been nice. But this is what it is. Today is pretty sharply higher. If it stops rallying and turns around and makes lows lower than 33.18, I'll feel a lot better about the shoulder having formed, past tense. And then it's got to break through the support area that it's got a little bit below it and keep on going. Got the neckline, got the objective, pretty damn bearish if it works correctly. And I have a little bit of doubt about it because I'm not happy yet with the last shoulder. Next, platinum. Doji today has dropped like a rock for several days. Almost got to support. Deserves a little bit of a bounce, but this is not much. Did not quite get oversold. So I'm going to have to pass on platinum in terms of being feeling good about what I'm saying. So I'm not sure. Don't know. Let's just wait a little. High grade copper, overbought at a resistance level, very ripe territory for a turn down. So today's low is just a hair higher than yesterday's low. So it's not an outside trading range. And it is a higher high. And we're right up here at the high right now. And we are overbought. So I think we're pretty close time-wise and price-wise to a high. But it could be a little higher than we are. I don't know, maybe up to 2.26. Could even be all the way up to the previous top at, 5.36. All the way up to the previous top of 5.35, maybe. That seems like a bit of a stretch when we're this overbought right now at 81 RSI. Probably not getting all the way to the higher highs, but I got to be a little more friendly, but we're close to a top. You watch for sell signals here. You watch for patterns to form on a short-term basis that look like it could be something on the bearish side starting. Grain, not cooperating. We're starting to see, in particular, soybean meal in a minute, previous support levels start to give way slightly. And I don't like that. Remember, I'm trying to justify a very long-term big bottom in the grain complex in general. So I am turning a little less bullish, put it that way. It hasn't destroyed the bull story longer term, but I don't like the way it's acting. So I'm not a buyer yet. I'm not getting all hot to trot about the long-term bull move yet. And I can see the possibility, even the probability of minor new lows here. New lows since December. Well, I meant new lows since March 4th. We'll see. Soybean oil, a few ticks higher at the moment. The rally today is not doing anything for me whatsoever. I already had a bullish engulfing buy signal, ER signal, a couple of days ago. Didn't work, made lows lower than that low. I know sometimes these are part of bottoming formations, but not necessarily. But they are frequently part of a bottom, very similar to this one here. And this one is basically part of the low trading range area. But we look for these kind of signals. This red is smack dab on top, the highest high. And those are the ones I love. That's the reason why I developed the ER signal system. So, gotta be a little disappointed. I'm not getting what I want quickly. but soybean oil's hanging in there. Soybean meal is making new lows for about 2 or 3 weeks and is not very far away from the lowest low for many, many months. Not what I want. I want a big turnaround, awful quick, big bullish move up, large reversals, hopefully from oversold conditions, but we're not even oversold. So I got to think it could slip off some more. And corn is slipping almost new lows for 2 or 3 weeks. Not quite, but certainly could happen today. It's just not moving up. Getting disappointed about this bullish situation for grains. Come on, start moving up. Next, wheat. Again, new lows for the last 2 or 3+ weeks. Almost a new low, and this time, if it makes a new low, like I think it was meal, it's going to be a new low for many, many months. In fact, it'll be a new low since the war began and the historic high with a blow off top, which was an ER sell signal on the high day, a double limit move, limit up to limit down, about 3 years ago. Okay, next, we have a top, and it's working, and it's Friday for cattle. We have an outside down day and overbought conditions and a great sell signal. It made a little bit more money yesterday, and it made a chunk more at one time today, but we're not on our lows. We bounced back fairly good, but I don't see this as anything wrong. I'm certainly looking for a significant break, more than this, and I'm thinking 190, and it might even be more than that. This could go down as something like a double top, maybe, or something close to that. Not quite as good as the high, if it stayed that way, on Thursday of last week. But Friday was a significantly higher high, and then you had the big bearish engulfing. Okay, now hogs. I'm kind of support level, bouncing a little, not oversold, neutral RSI. Can't say much about the hogs. But let's go look at those two stocks. Shell had one of my backwards reversals on Thursday of last week and did come down nicely on Friday, but bounced off support Friday and yesterday, Monday, and today it blew it all to hell. So it gapped up, but that's a story by itself. Remember, gaps are almost always closed. So I got what I wanted for only really one day afterwards on this backwards reversal. Exhaustion gap got closed. Market turned around after hitting support at the same time, same day, made new highs today. But look, we're only a little bit higher on the day at the moment and about low and last. And if it closes below last Thursday's high and close, which are almost the same, that could be an indication of it not being able to hold the strength it made earlier this morning and be the beginning of some bearish kind of move. That's why I'm still showing you this. Otherwise, if it turns around and starts to move back up again, I'll probably abandon this one because it didn't act quite what I expected after that reversal on Thursday. And it's a very rare one. I don't get a chance to talk about them that often. It looks very bullish the day it happens, but it ends up frequently being a lot more bearish than just one day down. So it didn't work. And we got a buy signal on Friday in Apple. Great. Moved up nicely yesterday. Currently up a lot more. Nice chunk. Couple dollars, 33 cents momentarily. Near the high. Coming up okay. Breaking through some resistance levels, which we already tested and closed above at 219-ish yesterday. Long-term trend still up. Shorter term since the top in around Christmas, day after Christmas, modestly lower. But the bullish engulfing I love. It looks good. I'm looking for more of a rally, probably up to 227. And I certainly can't rule out something up to the 240, 45, 50 level. Apple looking pretty good. Checking out E-mini again real quick. 1 minute chart. We've had a little rally here. I need it to break these lows. and that'll probably start a significant amount of downside momentum. You guys have a great trading day and profitable trading to you.